Let's move our attention to the markets and taking a look at how Kenya has fared for this Tuesday. Looking at the NSE 20, sitting slightly stronger there by 0.4%, 4,978 points. Just checking in on how the currency is faring against the US dollar, 84.25 against the greenback, and moving once again up above that 84 level. You're starting to see energy sector demand coming through for dollars, and that has been a factor that's weighed down on the Kenyan shilling and certainly moving out of the band that it has been trading in recently. Of course, you've also got broad-based dollar strength globally right now, so that of course is one of the factors that is playing into that currency pair. But so far, you're looking at the dollar, which is up by almost 0.8% right now. Let's move on to Nairobi and to our market watcher on that end. We've got Johnson Nderi, investment analyst at Suntra Investment Bank, standing by from our studios. Thanks so much, as always, for joining us today, Johnson. So when you look at the markets right now, I mean, what stands out for you when it comes to some of the movements we've seen coming through from various sectors right now?
Well, we've got one of the biggest movers, gainers today. We've got CFC Stanbic, obviously driven by released results earlier on today. Then obviously for me, I think the market has just been driven basically by monetary policy at this point, both international and local. So we're going to see the market being buoyed by those two macro occurrences going forward.
Just looking, I mean, that of course is a theme that we're seeing across equity markets right now, and of course we've seen interest rates reducing quite substantially in Kenya. Do you see that there is a rotation taking place from the bond market to the equity market in quite a significant way right now?
I don't know whether we'll be seeing a rotation because it's not necessarily from the fixed income market only, also from real estate. So you've got some people making some money in real estate and thinking, well, let's put it let it sit in the stocks for a while as we think about what to do. We've certainly seen NSSF coming back. They bought Bamburi. They increased their stake there. So again, you also got money coming in from the fund managers as well. So you've got all this just from the new revenues being raised, being directed to the equity, and this can be fueled by the increased liquidity in the market.
Let's just dwell on CFC Stanbic's numbers for now, because if you're looking at those earnings there, I mean, certainly surprising the market, that almost 80% jump in pre-tax profit. Going forward, do you think that CFC Stanbic is going to continue to produce results which come through and of course show such strong growth, because it has been something that market certainly wasn't looking for relative to of course what other banks are showing in Q1?
Well, for the longest time, CFC Stanbic has been underperforming. The assets were yielding lower returns than they ought to have been. So what you're just seeing is CFC Stanbic just matching the market in the average players in the market, and being one of the biggest banks in the region. Assets of at least 100 billion dropped from 130 something now to about 100. You can see that they're one of the largest banks in the country, and obviously now it's just about a matter of sweating the assets. So I think that's what they're doing right now. They're becoming more efficient, as measured by the cost-income ratio, which really is increasing the productivity of their workers, especially in retail, where we think that they still have a lot of room to grow. And of course, the market leaders in corporate banking. So that has been a very good anchor for them. So they're just leveraging on that to improve their performance. What
do you see as their biggest challenge when it comes to growing the retail aspect of their business in Kenya right now?
Well, a lot of analysts, I'm not going to mention names here, think that the South African aspect, it's taken them quite a bit of time just to understand the market and to produce products that will move, and how to market yourself and position products in the market. The Kenyan market is a bit flexible. I remember Michael Joseph kept saying of Safaricom that Michael Joseph of Safaricom kept saying that we are a very peculiar market. So I think it takes quite a bit of time to understand the Kenyan market and just be able to tailor products that suit it, and once you do that, once you've cracked that, I think growth there just picks up from that point on.
But do you reckon that CFC Stanbic right now has been in the market long enough to understand what Kenya and East Africa needs?
Well, they have. Of course, from a HR perspective, they've had to get new talent on board. This executives who understand the market. So that has helped us a bit. So I think just putting this, aligning the structures to be able to penetrate the market better has certainly helped.
And you know, if we're talking about the local banks, I mean, Equity, KCB always come to mind as the blue chips when it comes to those local banks. And interesting that Equity now valued at you know, a higher valuation market cap wise relative to KCB, sitting at 128.7 billion shillings, and that's 6.2 billion above KCB. So we keep on seeing those two fighting for the top position when it comes to most valuable banking stock. I mean, do you think that valuations specifically on Equity are justified right now?
Well, the valuation on Equity is a result of two things. Number one, they've got a very high return on investment, so that has helped boost the valuations in terms of PE multiples. And then secondly, they have you know, demonstrated growth, strong growth historically since they got their banking license. I think that was in 2002 or 3. So since then they've been, you know, growing, and they've demonstrated to the market that their growth is sustainable. So a lot of people are buying further forward incomes or earnings, and are willing to pay more and more. So because of that, the valuation keeps rising.
Yeah.
So if you ask me, I think it could be justified.